Welcome to our Hong Kong Brief Show. I'm your host, Jenny. Today, we're diving into some exciting news from Hong Kong and beyond. First up, Hong Kong stocks took a nosedive to a two-week low, shaken by fears of rising inflation and geopolitical tensions. Tech giants like Alibaba and Tencent were not spared, and the market sentiment was influenced by the Federal Reserve's decision to keep interest rates steady, along with concerns over the Israel-Iran conflict and its impact on global oil supplies. Major Asian markets also saw declines, but there was a silver lining with Foshan Haitian Flavouring's successful 10.1 billion Hong Kong dollars IPO giving some positive momentum. Next, let's talk about education. 6 public universities in Hong Kong have climbed in the global rankings, with HKU reaching its highest position since 2004 at 11th place. Despite some government funding cuts, Hong Kong remains a powerhouse of higher education, with 5 universities in the top 70 worldwide. HKU's reputation for academic excellence and employability reflects Hong Kong's growing influence in global academia. It's inspiring to see how these institutions continue to shine on the world stage. Finally, on the financial front, Hong Kong's interest rates stayed steady at 4.75%, aligning with the U.S. Federal Reserve's cautious stance. Even with the U.S. holding rates, Hong Kong's interbank rates have fallen to near 3-year lows, thanks to declining confidence in the dollar and reduced carry trade activity. This creates a unique market environment where rates are low, and the economy faces some uncertainties. All in all, it's a fascinating time for Hong Kong's financial landscape. Please continue to watch for more detailed insights. According to South China Morning Post, Hong Kong stocks have recently plummeted to a 2-week low, driven by concerns over rising inflation and geopolitical tensions. The Federal Reserve's decision to keep borrowing costs unchanged for the 4th time this year has added to market uncertainty, especially as it warned that tariffs could push prices higher and prolong inflation effects. The conflict in the Middle East, particularly the escalating U.S. involvement in the Iran-Israel situation, threatens the global oil supply, further fueling fears of inflation and economic slowdown. Major tech giants like Alibaba and Tencent experienced declines, while rate-sensitive property stocks also fell, reflecting investor apprehension about the economic outlook amid these geopolitical and monetary policy challenges. Meanwhile, South China Morning Post reports that Hong Kong's higher education landscape is gaining international recognition. 6 local universities have improved their global rankings, with the University of Hong Kong soaring to 11th place worldwide, surpassing 2 mainland Chinese institutions. This marks HKU's best performance since rankings began in 2004, driven by its strong academic reputation and graduate employability. Other universities such as CUHK, GUST, and PolyU also made notable gains, demonstrating Hong Kong's resilience and academic excellence despite government funding cuts and financial pressures. The rankings highlight the city's growing influence as a hub for global talent and research, reinforced by initiatives like the Study in Hong Kong branding, even as universities draw on reserves to sustain their competitive edge. The South China Morning Post also details the Hong Kong Monetary Authority's decision to maintain its base rate at 4.75%, aligning with the Federal Reserve's cautious stance amid ongoing trade tensions and inflation concerns. The Fed's pause in rate hikes reflects uncertainty over the inflationary impact of tariffs and global trade developments, with market expectations leaning towards potential rate cuts later in the year. Hong Kong's banking sector is closely watching these monetary policy signals, as lower U.S. rates could eventually lead to reduced prime rates locally, encouraging borrowing and investment. However, with high inventories and cautious optimism about property prices, banks remain prudent, awaiting clearer signals before adjusting their lending rates further. South China Morning Post highlights the remarkable debut of Haitian Flavouring and Food on the Hong Kong Stock Exchange, where the Chinese condiment giant captivated investors with its 10.1 billion Hong Kong dollars listing. The company's shares surged 3.3% at debut, reflecting overwhelming demand from retail investors who applied for margin loans totaling over 400 billion Hong Kong dollars, around 700 times the stock allocated to them, underscoring their bullish confidence. Haitian's listing, which became the second largest of the year in Hong Kong, not only solidifies Hong Kong's status as a premier global fundraising hub but also signifies the increasing trend of Chinese companies opting for Hong Kong listings to expand internationally, leveraging supportive policies and streamlined processes. The company's strategic plans include expanding production, digitizing supply chains, and enhancing product development, with major cornerstone investors like Hillhouse Investment and GIC backing its growth, further emphasizing the brand's dominance and the city's growing appeal as an IPO destination amid a surge in A2H stock listings. Nikkei Asia delves into the intriguing dynamics of Hong Kong's interest rate environment, where rates have fallen despite the city's currency being pegged to the US dollar. The Hong Kong dollar remains within its narrow trading band, with the Hong Kong Monetary Authority intervening in May to sell 129.4 billion Hong Kong dollars in US dollars when the currency hit its upper limit. Interestingly, interest rates in Hong Kong have plummeted, with the HIBOR dropping to around 0.5%, the lowest in 3 years, while U.S. benchmark rates like SOFR hover above 4.3%. This widening gap results from diminished carry trade activity, as market confidence in the U.S. dollar wanes amid geopolitical uncertainties and fears of a weakening dollar, leading to high liquidity levels and low borrowing costs in Hong Kong. The persistent rate disparity and the peg's distortion threaten to undermine market stability, prompting analysts to consider the possibility of a future reassessment of the currency linkage as market sentiment shifts away from reliance on the greenback. South China Morning Post also features Antonin Tron's journey in founding Atlian, a Paris-based luxury fashion house committed to sustainability and craftsmanship. Tron's vision was initially ambitious, creating a fully sustainable ready-to-wear label, but he soon faced the harsh realities of balancing eco-consciousness with high-quality luxury production. Despite setbacks, including the challenges of sourcing sustainable fabrics and managing costs, Tron remains dedicated to responsible fashion, experimenting with innovative textiles like fishnet-derived fabrics and maintaining a tight-knit team rooted in French ateliers. His aesthetic emphasizes sculptural silhouettes and a focus on the body, inspired by fashion legends like Vianet and Madame Grès, blending minimalism with a sporty elegance. The brand's organic connection with Kylie Jenner, who wore Atlian during her pregnancy and collaborated with Tron on custom pieces, exemplifies how authentic relationships and a shared laid-back ethos, especially with Tron's love for surfing, can propel a small, independent label into global recognition, demonstrating that innovation and sincerity can redefine luxury fashion's future. The South China Morning Post vividly captures Hong Kong's rugby team's strategic preparations for their upcoming match against Sri Lanka at Kai Tak Youth Sports Ground. Despite their recent commanding victory over the United Arab Emirates, Hong Kong's coach Andrew Douglas emphasizes the need for tactical adjustments, aiming for more bang in their gameplay against a relatively unknown opponent. With key players like Luke van der Smit potentially returning and others facing late fitness tests, the team is poised to adapt their style to counter Sri Lanka's unstructured and ad hoc approach, which recently challenged stronger teams like Korea. The narrative highlights Hong Kong's focus on dominant forward play, swift lineouts, and aggressive ruck engagement to prevent Sri Lanka's unpredictable, loose style from disrupting their game plan. Victory would propel Hong Kong closer to a World Cup berth, adding a layer of urgency and excitement to this crucial fixture. The South China Morning Post also paints a compelling and sobering picture of Hong Kong's rising tide of personal debt, driven by predatory lending practices and a fragile economic climate. FAI Chan's harrowing story exemplifies how quick loans with exorbitant interest rates, up to 40% annually, trap borrowers in a relentless cycle of debt, with living costs and property prices compounding their struggles. The proliferation of licensed money lenders, from large firms to illegal operators targeting vulnerable groups like foreign domestic helpers, underscores a systemic problem where financial desperation meets regulatory gaps. Reports of aggressive debt collection, illegal practices, and the psychological toll on borrowers, including elderly and mentally disabled individuals, reveal a city grappling with a debt crisis that's fueled by online advertising, lax enforcement, and economic downturns. Official data show a surge in bankruptcy orders and disputes, painting a stark picture of a society under financial stress, with calls for regulatory reform growing louder amid ongoing efforts to tighten oversight. The South China Morning Post further explores the evolving landscape of bunion management, blending medical insights with fashion-forward solutions. The article narrates the personal and societal shift from viewing bunions as purely cosmetic issues to recognizing their impact on lifestyle and footwear choices. It details how tight shoes, especially pointed-toe heels, contribute to bunion formation by pushing the big toe sideways and causing bone growth. Yet, modern design innovations by brands like Cala Shoes and Soul Bliss challenge outdated notions, proving that stylish, supportive footwear can accommodate bunions without sacrificing aesthetics. The piece emphasizes early intervention, such as toe separators and exercises, to slow progression, and reassures that surgery today is less invasive and more effective than in the past. This narrative celebrates a new era where comfort, style, and foot health coexist, empowering those affected to walk confidently into the future. The South China Morning Post vividly depicts Vancouver's Chinatown as a neighborhood teetering on the brink of disappearance, struggling with poverty, drug addiction, homelessness, and the lingering shadows of its past glory. Donna Cito's nostalgic watercolors and heartfelt memories of the 1990s evoke a once vibrant hub of Chinese culture and commerce, now shadowed by economic decline and external challenges like the rise of a newer Richmond Chinatown and the encroaching issues from neighboring downtown East Side. Despite efforts to revitalize it through cultural initiatives, new businesses, and government support, including the recent investment of $30 million Canadian dollars, Chinatown faces persistent threats from crime, vandalism, and demographic shifts, with many elderly residents relying on the neighborhood for essential services. Community leaders like Carol Lee and local entrepreneurs are passionately working to preserve its heritage, opening restaurants, cultural centers, and affordable housing, while high-end restaurants and museums celebrate its cultural richness. Yet, ongoing issues such as crime and gentrification continue to threaten its survival, prompting government action and police initiatives. Amidst these struggles, there is a resilient spirit among residents and business owners who recognize the importance of safeguarding Chinatown's history and identity, emphasizing that its future depends on collective effort and unwavering dedication to ensure this cultural gem endures for generations to come. According to the South China Morning Post, a significant brain drain is underway in the United States, as many top-tier academics are contemplating leaving due to dwindling funding and threats to academic freedom under Donald Trump's presidency. Esteemed scholars like Timothy Snyder and Marcy Shore have announced their departure from Yale to join Canadian institutions, citing concerns about the future of American democracy. Meanwhile, senior researchers in fields such as physics, AI, and medicine are receiving lucrative offers from abroad, with some even surprised by their own market value. This migration is compounded by a decline in international students, particularly from India, who are reconsidering studying in the U.S. amidst an increasingly isolationist stance, exemplified by visa hurdles and policy uncertainties. This exodus signifies a dual challenge for the U.S., losing its brightest minds and facing a slowdown in talent inflow, which could hamper future innovation and research leadership. Nikkei Asia reports that Japan is experiencing a record influx of visitors in May, with over 3.6 million arrivals, driven mainly by increased flights from South Korea and China. The country's tourism sector is thriving, with Chinese visitors soaring by nearly 45% and South Korea contributing significantly through new flight routes. However, the number of visitors from Hong Kong has declined sharply, largely due to social media rumors about potential disasters in Japan, leading to cancellations and reduced flights. Despite the promising numbers, concerns about a global economic slowdown and the strong yen threaten future growth, with experts warning that hotel shortages and diminished value perceptions could temper the tourism boom. The Japanese government remains cautious, monitoring trends closely and emphasizing the importance of evidence-based information to counter misinformation that could undermine the recovery. The Sydney Morning Herald highlights the cautious optimism in global financial markets, as U.S. stocks show slight declines following the Federal Reserve's signals of potential rate cuts later this year. The Fed's projections suggest 2 interest rate reductions by 2025, aiming to bolster economic growth amidst ongoing trade tensions and inflation concerns. Federal Reserve Chair Jerome Powell acknowledged the impact of tariffs, which are set to potentially resume in July, and emphasized the uncertainty surrounding their effects on prices and economic activity. Oil prices fluctuate amid geopolitical tensions involving Iran, with the U.S. considering military options and fears of disruptions in crude supply. Meanwhile, Wall Street sees mixed results, with energy and steel stocks recovering from recent losses, while bond yields ease slightly. The broader market remains sensitive to geopolitical developments, economic data, and policy signals, leaving investors cautiously optimistic about the path ahead. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.
Morning coffee, fresh off the press. Reading headlines, feeling blessed. World keeps turning, stories unfold. Every moment, news gets told. Flipping channels, clicking tabs, feeding my mind's hunger grabs. Facts and figures, images bright. News keeps rolling day and night. Headlines and headlines to know. Never stopping, always go. Scrolling, swiping, reading on. Daylight breaks into dawn. Headlines and headlines can't get enough.